Good day, everyone. My name is Maria Larisi Magnan. I am here to discuss about pertinent laws on the distribution of partnership, profit, and loss. So before we start our discussion, at the end of the discussion, we should be able to summarize the values to be followed in the distribution of partnership, profit, and loss, compute the share of each partners in the profit and loss of the partnership, record properly the journal entry for the share of each partner in the distribution of profit and loss of the partnership, and last, apply the various ways of the computing bonuses of pertinent laws of the distribution of partnership profit and loss. Article 1797. The losses and profit shall be distributed in conformity with the agreement. If only the share of each partner in the profits has been agreed upon, the share of each in the losses shall be the same proportion. In the absence and stipulation, the share of each partner in the profits and losses shall be in proportion that what he have contributed. But the industrial partner shall not be liable for the losses. As for the profits, the industrial partner shall receive such as share as may be just and equitable under the circumstances. There are two common types of partners. The one is capitalized partners and the industrial partners. Capitalized partners contributes money or property, while industrial partner contributes only service or skills. According to Pertinent Law Article 1797, ang profit o loss is kinahanglan i-distribute based sa agreement sa mga partners. Kung na sila agreement, mautoy sondon. If wala sila agreement, profit is shared according to the law, which is ang Pertinent Law Article 1797. Sa losses is also shared according to the law. So meaning, importante jud nga na ay klarong agreement aron malikayan ang misunderstanding. Rules in profit sharing. Rule number 1. With profit and loss agreement, profits of the partnership shall be divided among the person, both capitalized and industrial, in accordance with the profit sharing ratio stipulated in their agreement. So, ang meaning ani sa rule number 1 is kung nasa sila agreement, sundon lang ang ilang nakasabutan. For example, si partner A, B, C. Kung ang ilang agreement is ang makuha sa partner A is 30%, sa B is 30%, sa C is 40%. Kung ang profit nila is 100,000, ang ma-receive sa A is 30K, sa B is 30K, while sa C is 40K. Kay simple lang ilang gibuhat, kay ilang gi-follow ang ilang gipa-agreement nga percentage. Rule number 2, no profit and loss agreement. In the absence of a profit-sharing agreement, profit shall be divided among the partners in proportion of their respective capital contribution. If all capitalized partners, if there is industrial partners, he gets a just and equitable share, and the balance of the profit to be divided among the capitalist partners in proportion to their capital contribution. And if there is a capitalist industrial partner, he gets one just and equitable share as an industrial partner, and another share as a capitalized partner. So, meaning aning rule number 2, kung wala sila agreement, lahi ang pag-share. For capitalized partners, ang basis kay ilang capital contribution. While sa industrial partners, ang losses nga hatagan ang industrial partner og just and equitable share, meaning fair ang share depende sa iyang contribution sa business. Let's proceed to rules on loss sharing. Rule number 1, loss of the partnership shall be divided among the partners in accordance with their loss sharing agreement. The industrial partner may be liable for loss in accordance with their profit and loss sharing agreement. So, meaning sa rule number 1 sa loss sharing, kung nasa lay agreement sa loss sharing, mao gihapon ilang sundon. Rule number 2, in the absence of loss sharing agreement, the loss shall be proportioned among the partners in accordance with their profit sharing agreement. Rule number 2, in the absence of loss sharing agreement, the loss shall be proportioned among the partners in accordance with their profit sharing agreement. So meaning sa rule number 2, kung wala sila loss agreement pero naa sila profit agreement, ang loss is shared using the same profit ratio. So meaning ano is example sa profit sharing is ang partner A is 30% iyang makuha. It means if sa loss sharing 30% po iyang makuha kay sa profit sharing is 30% man iyang makuha. So sa loss is 30% po. Rule number 3, in the absence of any profit and loss sharing agreement, loss shall be divided among the capitalized partners in accordance with their capitalized contribution. And if there is an industrial partners, he is totally exempted from sharing in the losses. So, ang gipasabutan ni sa rule number 3, kung walay profit and loss agreement, capitalist partners lang ang mo-share sa loss based sa iyang capital contribution. While ang industrial partners, dili siya mo-share tungod kay serbisyo ra iyang gi-contribute. Let's proceed to the example applications of the loss on profit and loss share agreement. So, number 1, they have a profit and loss agreement. A will share 30%, B will share 30%, and C will share 40%. Sa case 1, the partnership realized a net profit of 100,000. Distributed of profit. So since ang share is ang A is 30%, man B is 30%, C is 40%. So ang mahitabo is ang profit nila is 100,000 man. So 100,000 times 30% or pwede po nimo siya i-convert to decimal. 30% convert to decimal is 0.30. So ang hitabo is 100,000 times 30% or 0.30 equals to 30k. So, ang makuha, ma-share, ma-receive sa sa A is 30k as per sa B kay para sila share. Sa C is 100,000 times 40% or 0.40 equals to 40,000. So 30 plus 30k plus 40k is equal to 100,000. So ano sa number 2, they have profit agreement but no loss agreement. So A will share 30%, B is share 30%, and C will share 40%. So case 2.1, the partnership incurred a net loss of 50,000 distributed of profit. So since A ug B is the same raman sila share 30%, ang hitabuan na is 50% na ng net loss. So 50,000 times, 50,000 times 30% is 15k, as well as sa B kay payaran sila share. Sa C is 50,000 times 40% equals to 20,000. So 15,000 plus 15,000 plus 20,000 equals to 50. So number 3 is they have no profit and loss agreement. Case 3.1, a partnership realized a net profit of 100%. So the losses in the absence of any profit and loss agreement, the industrial partners shall receive a just and equitable shared in the profit. He will have a priority in the distribution of profit, being friends, assuming they agree that the just and equitable share of C for his labor is 30%. So the partnership realized a net profit of 100,000 distributed of profit. Profit is shared of C kay ang giingon is ang shared sa C sa profit is 30,000. So 100,000 minus 30 is 70. 70 na bilin. So kato nga 70 na bilin. I-divide ko sa A o B. So ang kuan ani is 50,000 man. So 50 divide 100 times 70,000. So 35,000 ang makuan as well as sa B. So ani is 35 plus 35 is 70. So mauto ang kuan sa net and loss. Net ay they have no profit and loss agreement. Sa loss sharing sad, if adunay 50% loss, ang A ung B lang ang mo share sa loss since si C nga industrial partners is exempted siya sa loss because ang iya rang contribute is service ra or skills. It's important to know ni mga lolo in terms sa profit sharing and loss sharing. So important ni nga topic because it helps partners understand how profit and losses are fairly distributed, kung klaro ang agreement, malikayan jud ang conflict og mahimong transparent ang partner business. So in summarize, if there is an agreement, always follow the agreement. If there is no agreement, follow the provision of Article 1797. Industrial partners receive a fair share of profit but are generally exempt from losses unless otherwise agreed. Proper profit and loss sharing helps maintain fairness and good relations among partners. So that's the end of my discussion. Thank you for listening.
Good day, everyone. Today, I'll be explaining 4 key topics about prohibitions of partners to engage in business. First is the industrial partners cannot engage in business for himself. According to Article 1816, all partners, including industrial partners, shall be liable pro rata with all their property and after all the partnership assets have been exhausted. For the contracts, which may be entered into in the name and for the account of the partnership under its signature and by a person authorized to act for the partnership. Article 1816 means all partners, including industrial partners, is personally nga sila'y manubag sa partnerships, debts, or utang once nga magamit ang assets para sa mga kontrata nga gihimo sa saktong pamaagi gamit ang company's name by an authorized person. So there are two rules apply in the liquidation of such contractual liabilities. First, the party primarily liable will, of course, be the partnership. All the partnership assets must first be exhausted in the settlement of its obligations. This means that ang partnership mobayad una gamiton tanang partnership assets such as cash, inventory, and equipment before mag-ask sa partner sa pagbayad sa bisag unsa. So the partnership itself is the primary debtor or a person who is most So the second one is the general partners, including the industrial partner, if any, will individually be liable pro rata or equally for the remaining contractual liabilities of the partnership to the extent of their personal assets. So if naapay nabilin nga utang, ang tanang general partners mobayad personally, proportionally, or equally. This means that agatong nagpautang makuha ang imong mga personal things like your house, car, or savings aron matabunan ang nabilin nga kantidad. So this is what we call unlimited liability. Unlimited liability means that ang business owners ang mo fully responsible sa tanang utang o meron sa company. Next is prohibitions of partners to engage in business. Industrial partners cannot engage in business for himself. In Article 1789, an industrial partner cannot engage in business for himself unless the partnership expressly permits him to do so. And if he should do so, the capitalist partners may either exclude him from the firm or avail themselves of the benefits which he may have obtained in violation of this provision with a right to damages. Article 1789 means ang industrial partner dili makaran or join sa laing business if walay partners clear permission. Kung mulabag sila, ang capitalist partners may remove them from the firm or waong tanang profits gikan sa unauthorized business plus claim payment for any right to damages or any resulting damages. An industrial partner is presumed to devote all his time and effort to the best interest of the partnership, so that he is prohibited to engage in any business for himself without the express consent of the partnership. This rule means an industrial partner is legally expected nga mahatag nila tanang time and effort to benefit the partnership. Maong dili sila allowed mo run or join any personal business unless the partnership clearly agrees first. The third one is the capitalist partner cannot engage in the same business as that of the partnership. In Article 18.8, the capitalist partners cannot engage for their own account in any operation, which is of the kind of business in which the partnership is engaged, unless there is a stipulation to the contrary. Capitalist partners are not allowed to engage in the same business as that of the partnership because of conflict of interest, and they might be a direct future competitor of the partnership. The capitalist partner might use the trade secrets of the partnership to the advantage of his personal business. Article 18.8 says mga capitalist partners dili makaran og same kind of business as their partnership unless naa sila rule nga gikasabutan para ma-avoid ang conflict of interest, unfair competition, and using the partnership's secrets for personal gain. And lastly is accounting for partnership operation. Partnership accounting follows the same daily recording, journalizing, ledger posting, and financial statement preparation processes used by sole proprietorships and corporations. But there are three key areas where partnership accounting is different. First is the distribution of profit. Profits and losses are divided among partners according sa ilang agreement, dili lang sa one owner. And the second one is the equity section on the balance sheet. Instead, sa one capital account, every partner has their own capital account showing sa ilang personal interest sa business. And the third one is the liquidation process. If the partnership closes down, we follow a specific order. Sell or ibaligya ang assets, pay outside debts, bayaran ang partnership of what they're owed based sa ilang capital accounts. This is much more detailed than closing a sole proprietorship.
So let's move on to the partner's accounts. So first we have the capital account. So we already know what is capital account, diba? It shows how much a partner owns or has invested in the partnership. So ma-record ni ang mga investments, mga additional investments, share in profit o katong other transactions that affect their ownership. So why man nga need nga ang each partner na ay separate account? Because each partner invests different amounts and has different shares in the business. So, the capital account of each partner is credited with the following. So, first we have the initial investments in the form of cash, merchandise, or other assets. So, meaning, it is the first money or asset nga sa partner nga mag-contribute to start their business or partnership. So for example, mag-invest ka og 100,000, so mo na siya ang kwarta nga masud sa imong business. So next we have additional investments in the form of cash, merchandise, or other assets. Meaning, may tabo ni siya kung ang imong partner adds more money or asset bisan pag nag-start na ka sa imong business. Kung mag-add siya og laing kwarta, muna siya additional investment. And then, if the partner has no available fund and the payment of partnership obligation was made by the partner from his personal funds, and such will be considered as an additional investment. So, meaning, si partner pays partnership expenses using his personal money. Since he used his own money for the business, matawag na siya og additional investment kay ija mang own nga gamit. So matawag na siya og additional investment. And then lastly is closing the credit balance of drawing account using indirect method and closing the credit balance of income summary using direct method. So when we say indirect method, mo ni katong imong income and net loss is ma-record una sa drawing account and then to capital account. On the other hand, si direct method is ma-record na siya directly sa capital account. So, ang capital account mag-debit with the following permanent withdrawals. So, meaning, when we say permanent, meaning dili na ibalik ang kwarta nga i-withdraw gikan sa business. Muna siya permanent withdrawals. We have the amount of interest or share sa partner sold with the consent of the other partners. And then again, i-close na sad. So lastly, i-close na sad ang debit balance of drawing account using indirect method and closing the debit using the direct method. So always remember nga if ang capital mo increase, meaning credit si Jai butang. If capital mo decrease, debit. So the second account is the drawing or withdrawal account, also called personal account. So it is used to record money or assets that a partner takes from the business or personal use. So why does each partner need a separate drawing account? Because every partner withdraws different amounts, and then this helps the business know how much each partner nga ilahang withdraw. So kanus aman si drawing account mahimong debit. So here are the following. We have withdrawals of cash or other partnership assets. These withdrawals are temporary in nature and to be deducted from the partner's share in the profit of the partnership. So when a partner withdraws cash or business assets for personal use. Next is the share in partnership loss using indirect method, meaning if the business loses money, each partners mo share sa nalugi nga money and then ma-record sa ilahang drawing account. And then lastly, closing the credit balance of drawing account to capital account, because at the end of the accounting period kay ang drawing account is i-close man and then transfer to the capital account, diba? Kay dapat man ang zero ang balance sa drawing account kay balance siya sa capital. So the drawing account ma-credit with the following: allowance for salaries or bonuses, not as an expense to the firm but as a share in the profit or loss of the partnership. Meaning, it is given to a partner, ang katong allowance nga or bonuses nga gihatag sa partner is dili siya expenses, kundi part na sila sa partner's share in the profit. And then, interest allowed on their capital balance. If the partnership agreement says that partners will receive interest on their capital, hatagan sila og dugang nga bahin sa profit based on how much they invested. So, ato na pong i-close ang credit balance of income summary account using indirect method. So, if the partnership earns a profit, kana nga profit is ma-record na siya sa income summary account. And then, atong i-close na po into drawing account and then ni capital account. So, always remember na if ang drawing account mo increase, so debit. If mo decrease, mo na siya ang credit. So again, when we say personal withdrawals, it is made in anticipation of profits are temporary. So they are recorded in the drawing account instead sa capital account. So according to the Securities and Exchange Commission, a partner can only withdraw up to the amount of his or her share in the realized profits. So again, drawing account is temporary withdrawals. Capital account is the partner's ownership. And then at the end of the accounting period, the capital account and the drawing account are combined. And then the statement of the partner's equity is the report showing why the partner's capital increased or decreased. So the third one is the loan account. What's the meaning loan account? So it is used when money is borrowed between the partnership and a partner. if a partner lends money to the partnership, ma-record ni siya as loan payable, which is liability because the partnership must repay the partner. So on the other hand, if the partnership na pod maglend og money to a partner, ma-record ni siya as due from partner or receivable from partner, which is an asset because si partner na pod must repay the partnership. So unsa to, if si partner lends money to the partnership, it is loan payable, which is liability. If si partnership lends money to the partner, mo na siya due from partner, which is asset because the partner owes the business. So we have the interest in the partnership and share in profit. So a partner's equity or interest is represented by the capital account. This account reflects his partner's original investment, katong first nga gi-invest made by the partner. And then the additional investment, katong extra money or assets nga contributed after the business has already started. And katong permanent withdrawals, if the partner permanently removes part of his investment. And then we have share in profits and losses, katong every partner receives a share of the partner's profit or loss according to their agreement. And then last one is the temporary withdrawal. It is for personal use. If katong imong partner nag-withdraw og money for his or her personal use. So if naay profit ang business, that's what we called nga ang capital is nag-increase. So if nalugi, si capital nag-decrease. So if na may agreement, mag-follow sa agreement nga sharing ratio. If no agreement, it will share profits according to each partner's capital contribution. And then the industrial partner, it contributes services, daily ang money. If industrial capitalist partner, it contributes both services and the money. So next we have how to record the distribution of profit and loss. So there are 3 financial statements. First is the income statement, meaning it shows the result of the business operations during a specific accounting period, and it tells whether the business earned a profit or had a loss. So for examples is na sales ng 100,000, then ang expenses nato is 70k. So ang business is naay profit nga 30k. Na kuan siya nasa siya ginansya, wa siya madugi mo na siya income statement. And then second one is the statement of financial position, or also called balance sheet, meaning it shows the financial condition of the business at the end of the accounting period. So makita nato ang assets, liabilities, ug owner's equity. And then lastly is the statement of the cash flows, meaning it shows kung asa gikan ang kwarta o giunsa paggamit ang kwarta. So there are 2 methods, katong direct method ug si indirect method. Again, si direct method mo to ang profit or loss is recorded directly in the partner's capital account. And then ang indirect method mo to ang profit or loss record in the drawing account first, and then transfer to the capital accounts through closing entries. So here in direct method, we have net income and net loss. So in net income, if the partnership earns a profit, kanang a profit is divided kung pila mo ka partner based sa inyohang agreement. For example, kaning number one is distribute the net income to each partner by crediting the capital accounts. So meaning, for example is ang partnership nag-earned a net income of 100,000. So si X ug si Y nga partners nag-agree nga mohatag sila og 50% nga shares. So each partner ay maka-receive og 50% sa ilang shares. So ang each partner maka-receive og 50,000. So atong journal entry is si debit income summary nga 100,000. Then credit si X ug Y nga capital 50,000 because the partners receive their share of the profit. So to close the balance of their drawing accounts to their capital account. So muna ni siya nga ang drawing account is i-close and ang balance is i-transfer to the capital account. So muna si number 2. So nga naman nga si capital na debit because the partner already withdrew the money. So ilahang capital is nag-decrease kay ila magi-withdraw. So si drawing maoy credit because ato naman i-close si drawing account. So in net loss, if the partnership incurs a loss, each partner will receive a share of the loss based on their agreement. So for example, the partnership incurred a net loss nga 20,000. So each partners mag-share sa nalugi nga 10K. Depende kung gusto nilang agreement. So our journal entry is si X ug Y nga capital nga 10K is debit. So nga naman kay ilahang capital nag-decrease man due to the loss. So kung ang capital nga mag-decrease manay i-debit. So atong credit is si income summary nga 20K. Kay we are closing the income summary account after nato ma-record ang nalugi sa business. So the step 2 is close the drawing accounts. After recording the loss, close the drawing accounts man to capital accounts. So muna siya atong journal entry na si debit. Ato ang debit is si capital and then credit si drawing to close the balance of drawing accounts to the capital accounts. So next method is the indirect method. Meaning katong the partnership's net income or net loss is first ma-record siya sa drawing account and then i-close to capital account. So for example, the partnership maka-earn o 100,000. Each partners receives 50% based on their agreement. So our journal entry is si income summary ato ang debit and then si drawing is ato ang credit. Kay ang drawing account is just a temporary clearing account. Then sa ikaduhang entry gidebit na siya aron mahimong zero o ato na siyang ibalhin sa capital. Like pareda na yung number 2 to compute the balance of their drawing accounts and then close to their capital accounts. So muna siya nga atong i-close to their capital account. So mahimo na siya alagi. So muna ni siya nga atong i-close. So muna ni siya nga atong i-close to their capital accounts. So si drawing ato ang debit and then si capital ato ang credit. So next is the net loss sa indirect method. So pareha ra japon nga i-record una sa drawing account then i-close sa capital account. So this is our examples, our journal entry example. So i-distribute ang net loss sa each other. So sa each partner by debiting the drawing account. So mo si drawing ato ang debit, then si income summary ato ang credit to record the distribution of the loss to each partner. And then i-compute ang balance of their drawing accounts, then i-close na sa to their capital accounts. So muna siya nga si capital ato ang debit and then si drawing ato ang credit para ma-close na ang balance sa drawing to capital accounts. So again, si indirect method, first ma-record siya sa drawing accounts to capital accounts. Si direct method, ma-directly record mo siya sa capital account. So that's all for my topic.
Illustration. Assume that Judy and Ryan enter into a partnership. So, nagsabot sila nga partnership sa business. Ryan will be the managing partner. Si Ryan daw ang mag-manage sa ilahang business. Then, they both invest assets and are both to receive capital credits of 270,000 and 90,000 respectively for their contribution. The partners agree to share profits and losses equally. So, partnership balance sheet after their investments resulted in the following balances. So, ang gi-invest ni Judy is 270,000. Then, ang kang Ryan nga 90,000. Total capital nila is 360,000. O, na sila kasabutan nga equal ilang may mong bahin. The case 1, the operation of the partnership earned a profit. So, assume that during the subsequent operation, it resulted in a net income of 75,000 pesos. So, na net income ni Judy o ni Ryan na 75,000. So, also, during that period, Judy has a drawing na siya gikuha nga 10,000 and Ryan has none. So, wala gikuha si Ryan. Then, the statement of partners' equity will reflect the following. So, atong i-state ang equity ni Judy o ni Ryan. So, capital beginning na ay capital si Judy nga 270,000 while kang Ryan is 90,000. So, ang total capital is 360,000. So, ang share in profits nila, tuhaon nila ang 75,000 tag 37,500 sila kada usa. So, total of 75,000. Then, ay drawing si Judy nga 10,000. So, ang total capital 10,000. Then, capital end, i-add na to ang 270,000 o 37,500. Then, i-minus ang 10,000 nga drawing ni Judy. So, total siya og 297,500. Then, kang Ryan is na siya capital nga 90,000. Then, ang share in profits nga 37,500. Total of 127,500. Then, ang capital end, i-total ng 297,500 o 127,500 equals na sila total capital ng 425,000. So, the agreement between Judy and Ryan provides that profits are to be shared equally. So, nagsabot sila nga patas silang pagbahin. Like 50% sila matausa. Then, the equities of both Judy and Ryan will therefore increase by 37,500 each. So, ang 75,000 i-divide 2 na sila tag 37,500 and decrease by their drawing. So, i-minus ang drawings nga nakuha. In the future, the partners will continue to share partnership profits and losses equally. So, patas nga pagbahin. So, number 1, the closing entry to record the distribution of 75,000 net income. So, ano siya, income summary, debit side, then ang credit side, Judy drawing at 37,500 o Ryan drawing 37,500. So, to record the distribution of profit mo ni siya. Then, sa number 2, after posting the journal entry above, compute the balance of their drawing accounts, then close to their capital accounts. So, atong close Judy drawing 37,500 minusan og 10,000 nga drawing na siya 27,500. Then ang kang Ryan 37,500 gihapon sa debit side kay wala man siya nakuha nga drawing. So ang ka Judy nga capital 27,500 na ang net, then ang kang Ryan nga capital 37,500. So to close the drawing accounts to capital accounts mo ni siya. Number 2. Then sa arita sa case 2, the partnership incurred a loss of 50,000. So nawala nga 50,000. Assuming however that instead of an income, the partnership suffered a loss of 50,000 and Judy has a drawing account of 10,000 while Ryan has none. So the statement of partners equity will show. So kang Judy o kang Ryan gihapon to 70,000, then 90,000, total of 360,000. Then share in net loss na sila tag 25,000, gitungaan nila ang nawala. Then ang na-drawing ni Judy, kang Ryan wala. So ang capital end ni Judy 270,000 minusan sa 35,000 na siya 235,000. Then ang kang Ryan nga 90,000 minusan og 25,000 nga loss na siya 65,000, total of 300,000. So number 1 arita sa the closing entry to record the distribution of the 50,000 net loss. So Judy drawing na mo ni siya nga 25,000, then kang Ryan 25,000, income summary of 50,000. So na-distribute na. Number 2, after posting the journal entry above, compute the balance of their drawing accounts and then close to their capital accounts. So Judy capital 35,000, then kang Ryan 25,000. So ang kang Judy nga drawing giadan sa drawing niya nga di ko siya 10, so 35. Kang Ryan wala 25 gihapon kay wala man siya drawing, hindi kuha.
Distribution of profits in partnership. When splitting net income, partners are rewarded for 3 things. First, we have services rendered, salary allowances, and bonuses for work time put into the business. Second, we have capital invested, interest payments based on how much money each partner put in. Third, we have pure profit, what's left after the above, shared as agreed. Fairness rule: if work and capital contributions are equal, profits are split equally. If one partner gives more effort, more investment, or both, they got a bigger share to match their contribution. Partnership profit sharing methods. First, we have arbitrary or agreed ratio. First, equally split profit evenly among all partners. Simplest way if contributions are similar. Second, agreed ratios. Follow whatever share the partners decided together, expressed as percentage ratio. For example, 60% and 40%. Second, fractional ratio. For example, 2/3 and 1/3. Algebraic ratio. For example, 3:2. Based on capital balances, profit is divided according to how much each partner invested, calculated using beginning capital, balancing at the start of the period. Next, we have ending capital, balances at the end. Second, average capital. Average amount invested over the whole period must vary if capital change. Short version, partners can split profit evenly by their own agreed ratio or in proportion to how much money each put into the business. This is the step-by-step ordered for splitting partnership profit or loss. First, we have interest on capital. Reward partners who invested more money. Rate and basis beginning, ending, average capital must be agreed first. Second, we have salary allowances. Pay partners for their work, skill, and time running the business based on their role and effort. Even if there's a loss, salaries are still given first. Third, we have bonus. Give extra reward usually to the managing partner, calculated at a set profit level. Fourth, we have remainder. Whatever profit or loss is left after the above is split following the partners' agreed ratio. Short, interest first, then salaries, then bonus, last split what's left as agreed. Next we have, this is the sample partnership problem showing how profit will be shared between Pete and Wad. Partners Pete and Wad is the managing partner. Capital both added withdraw money at different dates in 2014. 2014 amounts listed. Total profits is 120,000 pesos earned for the year 2014. Partners purpose will use their capital activity plus agreed rules to compute how much of the 120k pesos goes to each partner. It sets up the numbers needed to calculate their profit share, capital changes, who manage the business, and total profit to divide. That's all.
Good day, everyone. This is my report, a continuation of our topic about accounting for partnership formation. Using the following independent agreement, record distribution of profit to the partners using the indirect method. For task number 1, equally. Number 2, 1/3 and 2/3 ratio for Pete and Wad respectively. Number 3 is 60% and 40% ratio for Pete and Wad respectively. Number 4 is 1/5 ratio for Pete and Wad respectively. 5 is based on beginning capital balances. 6 is based on ending capital balances. 7 is based on average capital balances. Here's the solution for task 1 equally. Partners profit divisor equals share. For partner Pete, the profit is 120,000, divisor is 2, equal share is 60,000. For Wad, the profit is 120,000, divisor is 2, equal share is 60,000. So the total equal share is 120,000. For journal entry, income summary is 120,000, Pete drawing is 60,000, Wad drawing is 60,000. Solution number 2, fractional ratio. Partners fraction x profit equals share. Partner Pete, fraction is 1/3, x profit is 120,000, equal share is 40,000. For Wad, fraction is 2/3, x profit is 120,000, equal share is 80,000. The total equal share is 120,000. For journal entry, income summary is 120,000, Pete drawing 40,000, Wad drawing is 80,000. For solution number 3, percentage ratio. Partners ratio x profit equals share. For partner Pete, ratio is 60%, x profit is 120,000, equal share is 72,000. For Wad, ratio is 40%, x profit is 120,000, equal share is 48,000. So the total ratio is 100% and the total share is 120,000. For the journal entry, income summary is 120,000, Pete drawing is 72,000, Wad drawing is 48,000. Solution number 4, algebraic ratio. Partners ratio, fraction x profit equals share. For partner Pete, ratio is 1. fraction is 1/6, X profit is 120,000, equal share is 20,000. For WAD, ratio is 5, fraction is 5/6, X profit is 120,000, equal share is 100,000. The total ratio is 6, and the total share is 120,000. For the journal entry, income summary is 120,000, withdrawing is 20,000, withdrawing is 100,000. Solution number 5, based on beginning capital balances. Partners, beginning capital, fraction, profit equals share. For partner Pete, beginning capital is 100,000, fractions is 100 over 250, profit is 120,000, equal share is 48,000. For WAD, beginning capital is 150,000, fraction is 150 over 250, profit is 120,000, equal share is 72,000. The total beginning capital is 250,000 and the total share is 120,000. For the journal entry, income summary is 120,000, withdrawing is 48,000, withdrawing is 72,000. Solution number 6, based on ending capital balances. For A, compute the ending balance of each by adding all credits and deducting all debits. For B, compute the share of each based on the ending capital ratio as follows. Partners, ending capital, fraction, X profit equals share. For partner Pete, ending capital is 120,000, fraction is 120 over 320, X profit is 120,000, equal share is 45,000. For WAD, ending capital is 200,000, fraction is 200 over 320, X profit is 120,000, equal share is 75,000. So the total ending capital is 320,000 and the total share is 120,000. For journal entry, income summary is 120,000, withdrawing is 45,000, withdrawing is 75,000. For the last solution, number 7, based on average capital balances. A, compute the average of capital of each partners as follows. Average capital of Pete. Date, debit, credit, balance, months unchanged, peso per month. For January 1, credit is 100,000, balance is 100,000, months unchanged is 3, peso per month is 300,000. For April 1, credit is 10,000, balance is 110,000, months unchanged is 3, peso per month is 330,000. For July 1, debit is 15,000, balance is 95,000, months unchanged is 4, peso per month is 380,000. November 1, credit is 35,000, balance is 130,000, months unchanged is 1, peso per month is 130,000. For December 1, debit is 10,000, balance is 120,000, months unchanged is 1, peso per month is 120,000. On December 31, balance is 120,000, and the total peso per month is 1,260,000. So the average balance is 105,000. Average capital of WAD. Date, debit, credit, balance, months unchanged, and peso per month. For January 1, credit, 150,000, balance is 150,000, months unchanged is 3, peso per month is 450,000. For April 1, debit is 30,000, balance is 120,000, months unchanged is 2, peso per month is 240,000. For June 1, credit is 50,000, balance is 170,000, months unchanged is 4, peso per month is 680,000. For October 1, credit is 65,000, balance is 235,000, months unchanged is 2, peso per month is 470,000. And on December 1, debit is 35,000, balance is 200,000, months unchanged is 1, peso per month is 200,000. For December 31, the balance is 200,000. So the months unchanged total is 12 and peso per month total is 2,040,000. So the average capital balance is 170,000. For solution B, compute the fraction and the share of each partners. Partner, average capital, fraction X profit equals share. For partner Pete, average capital is 105,000, fraction is 105 over 275, x profit is 120,000, equal share is 45,818 and 18 cents. For partner 1, average capital is 170,000, fraction is 170 over 275, x profit is 120,000, equal share is 24,118.82 cents. So the total share is 120,000. For the journal entry, income summary is 150,000 pesos. Slip drawing is 45,818.18 cents. Forward drawing, 74,181.82 cents. Next is the profit and loss distribution for allowance of interest, salaries, and bonuses. Malakas and Maganda are partners in the M&M Trading in 2014. The partnership earned 120,000 pesos net income. The following are the abstract of the capital account of each partner as they appear in the general ledger of the partnership. Malakas Capital. On debit side, July 1, 15,000, December 1, 10,000. On credit side, January 1, 100,000, April 1, 10,000, November 1 is 35,000. On Maganda Capital, debit side, April 1, 30,000, December 1, 35,000, credit side, January 1, 150,000, June 1, 50,000, October 1, 65,000. Illustration. The bookkeeper of the partnership resigned and you took his place. As the new bookkeeper, you were asked to distribute the profit between the two partners and recording the journal entries in the books of the partnership under the following assumptions. Number 1, a 20% interest on beginning capital. Number 2 is a salary allowance of 20,000 to Maganda. 3 is a 10% bonuses to Maganda on net income. And number 4, the remainder to be distributed in the ratio of 2/3 for Malakas and Maganda respectively. Solution, distribution of profit. Malakas, Maganda, and remainder. Net profit remainder is 120,000. Number 1, 20% interest on beginning capital. 100,000 pesos times 20% for Malakas is 20,000. So the remainder is 100,000. 150,000 x 20,000. 150,000 times 20% equals 30,000 for Maganda. So the remainder is 70,000. Number 2, salary allowance to Maganda is 20,000. So the remainder is 50,000. Number 3, 10% bonuses on net income to Maganda is 120,000 x 10% equals 12,000. So the remainder is 38,000. Number 4, the remainder of 2/3 ratio, 15,200 for Malakas and 22,800 for Maganda. And so for the total for Malakas is 35,200 and for Maganda is 84,800. For the journal entry to record the distribution of the 120,000 profit using the compound entry is income summary 120,000, Malakas drawing 35,200, Maganda drawing is 84,800.
The report, I will be reporting about the distribution of profit and loss in a partnership and the financial statements of a partnership. Problem 1. We have two partners, Lereo and Basilio. Their partnership agreement states that they will receive 20% interest on their beginning capital. They will also receive 50,000 salary allowance each. Since Lereo is the managing partner, she will receive a 20% bonus based on the remaining net income after salary and interest was. After that, any remaining profit or loss will be divided into the ratio of 70% for Lereo and 30% for Basilio. Their beginning capital is 300,000 each. Case number 1, 400,000 profit. For the first case, the partnership earned 400,000 profit. First, we calculate the interest. For both partners, 300,000 times 20% equals 60,000. Then, each partner receives a 50,000 salary allowance. After deducting the salaries and interest, we have 180,000 remaining. Lereo's bonus is 30,000. After deducting the bonus, 150,000 remains. This 150,000 is divided 70 to 30. Lereo receives 105,000 while Basilio receives 45,000. So the total profit distributed is Lereo 245,000, Basilio 155,000. The total is 400,000. The journal entry is debit income summary 400,000, credit Lereo drawing 245,000, credit Basilio drawing 155,000. This entry distributes the profit to the two partners. Case number 2, 400,000 lost. For the second case, the partnership occurred a 400,000 loss. Since there is a loss, Lereo will not receive a bonus. The salary and interest allowances are first considered, and the remaining loss is divided according to the 70 to 30 ratio. The final loss allocated is Lereo 324,000 loss, Basilio 76,000 loss. Together they equal the total 400,000 loss. The journal entry is debit Lereo drawing 324,000, debit Basilio drawing 76,000, credit income summary 400,000. This entry records the distribution of partnership loss. Case number 3. For the third case, the partnership earned 200,000 profit. The salary and interest allowances total 220,000, which is more than the partnership profits. Therefore, Lereo will not receive a bonus. After considering the shortage, and the final distribution is Lereo equals 96,000, Basilio 104,000. The total is 200,000. The journal entry is debit income summary 200,000, credit Lereo drawing 96,000, credit Basilio. Now let's proceed to problem 2 is about the financial statement of a partnership. The partners are Toribio and Castor. According to their partnership agreement, each partner receives a 5,000 salary allowance per month. They will also receive 5% interest on their beginning capital. After salary and interest, any remaining income is divided into ratio of 3:2, which means Toribio receives 2 parts, while Castor receives 3 parts. The partnership's net income given in the problem is 150,000. The distribution of income is Toribio 80,500, Castor 69,500. The total is 150,000. The journal entry is debit income summary 150,000, credit Toribio drawing 80,500, credit Castor drawing 69,500. Now, the financial statements. The partnership also prepares 3 important financial statements. First, income statement. The income statement shows the revenues, expenses, and the final net income or net loss of the partnership. In this problem, the net income is 150,000. Second, the statement of changes in the partner's equity. This statement shows how the partner's capital changed during the year. We start the beginning capital, add the partner's shares of income, subtract the withdrawals or drawings, and arrive at the ending capital. And the last one, statement of financial position. The statement of financial position, also called the balance sheet, shows the partnership's assets, liabilities, and partner's equity. The basic accounting equation is assets equals liabilities plus partner's equity. If the two sides are equal, our statement is balanced. Closing. So, to summarize partnership, accounting involves determining the profit or loss. Distributing is according to the partnership agreement. Recording the distribution in the drawing accounts, and finally, closing the drawing accounts to the capital account. Now, closing the drawing accounts. After distributing the income, we need to close the drawing accounts to the capital accounts. This is important because drawing accounts are temporary accounts. When we close them, the partner's capital accounts are updated. The basic formula is ending capital equals beginning capital plus profit share minus drawings. So, to summarize, the partnership and accounting involves determining the profit or loss. Distributing is according to the partnership agreements. Recording the distribution, the drawing accounts, and finally closing the drawing accounts to the capital accounts. For problem 2, we also prepared the income statement, state of the changes of partners' equity, and statement of financial position. And that ends my report. Thank you.
Good morning, everyone. For the last topic of Chapter 3, I will be discussing partnership taxation, how the partnership is treated for tax purposes, who pays the tax, and how much tax is owed. And I will also be discussing how to compute the bonus of the managing partners. So first, let us define partnership taxation under the tax code.
Under the tax code, the term corporation shall include not only domestic and foreign corporations, residents and non-residents, but also partnerships, no matter how created or organized, joint stock companies, joint accounts, cuentas en participación associations, or insurance companies, but does not include general professional partnerships and a joint venture or consortiums formed for the purpose or undertaking construction project or engaging in petroleum, coal, geothermal, and other energy operations pursuant to an operating or consortium agreement under a service contract with the government. So, in short, under the tax code, partnership is generally treated like a corporation when it comes to paying income tax. It means that even if the partnership is consists of 2 or more people, the partnership is treated like a separate entities. But there are exceptions to this rule. One is the GPP, or the General Professional Partnership, and the other is a joint venture or consortiums involved in operating coal, petroleum, geothermal, and other energy operations, or if they are under agreement or service contract with the government. So let's discuss first the joint ventures and consortiums that are involved in coal, petroleum, and other energy operations. They may get special tax treatment as long as they operate under the required agreement or service contract with the government. So, for example, company A and B, they join together and plan to make an oil project, and they have a service agreement with the government. Since the project that they planned is something to do with petroleum and they follow the legal requirement of the law, they may receive special tax treatment. General professional partnership is formed by 2 or more professionals who practice the same profession together. For example, lawyers, engineers, accountants, muna siya ang GPP. So why is GPP an exception of this rule? So generally, GPP is exempt from income tax. The general partnership is not obligated to pay the income tax on its earning. Instead, however, they are required to file an annual income tax return to the BIR. This is to inform the BIR about the total income of the partnership and the share of each partners. Even though the partnership is exempt from paying the income tax, the partners are the ones who are going to be paying tax based sa kita sa partnership. For example, the GMA
law firm. So the GMA law firm is the partnership. And GMA is consist of Jem, Mary, and Angel. So they are the partners. So the GMA law firm earned an income of 900,000, and Jem, Angel, and Mary agreed to divide the income equally. So since there are three of them, so 900,000 divided by 3 is equals to 300,000. So they have 300,000 each. The GMA law firm will not be paying the income tax, but Jem, Mary, and Angel will be the one to pay the proper tax based on their share on their personal income. In simple, the business or trade or commercial partnerships. These are partnerships formed by persons for the purpose of engaging any kind of trade or business except general professional partnerships. This kind of partnership is subject to income tax. The rate of income tax are as follows. In 1997, 35% of taxable income. 1998, 34% of taxable income. 1999, 33% of taxable income. 2000, 32% of taxable income. This is up to 2005. 2006 up to 2008, there is 35% of taxable income. And in 2009 up to the current year, there is 30% of taxable income. Business, trade, or trade or commercial partnership is subjected to income tax. Ibig sabihin, magbabayad ang partnership ng income tax. So, ang business or trade or commercial partnership is formed by two or more person that comes together to form a business and to earn money. So, for example, GMA partnership. Jem, Mary, and Angel. So, they formed a partnership to open a grocery store. So, they gave capital, they help each other manage the grocery store, and they also split the income and the loss. Because the partnership is business and it sells goods, the partnership is obligated in paying the income tax according to the tax rules. The bonus agreement of managing partners. So, first, what is a managing partner? Managing partner, this is a partner in the partnership who's responsible for managing the business. For example, sa Jem, Mary, and Angel partnership, Jem is the one who manage the business. So, Jem is the managing partner. So, what is a bonus agreement? A bonus agreement is an agreement between the partners and the managing partner that says the managing partner will receive an additional amount or a bonus for managing the business. So we have 5 cases. So assuming in 2008, the net income after income tax of LB Trade Partnership. So LB Trade Partnership, this is trading. So it is subjected to income tax rate of 35%. 650,000 pesos. Compute the bonus of the managing partner under the following independent cases. So case number 1, the bonus is 10% of net income. So we have to note that the net income of trade partnership and corporation is always after income tax expense. Therefore, if the term used is just net income, it means after
deducting income tax expense. Ibig sabihin, when we use the word net income, tapos nang ibawas ang income tax expense. Tapos nang bayaran ang tax. Case number 2, the bonus is 10%. The bonus is 10% of net income before income tax. Case number 3, the bonus is 10% of net income after income tax and after bonus. Case number 4, the bonus is 20% of net income after bonus and after income tax. Case number 5 is the bonus is 10% of net income after interest on beginning capital balance and after salary allowance, but before bonus, assuming the interest on beginning capital is 14,000 pesos and the salary allowance is 20%.
So, bonus agreement of managing partner, case number 1. Bonus is 10% of net income, meaning the managing partner receives 10% of the net income. In the example, the net income is already 650,000 pesos after tax. So, meaning the net income is 650,000 and the tax is already deducted. So, we have to compute for the 10% of 650,000. So, 650,000 times 10% is equals to 65,000 pesos. So, bonus is 65,000 pesos. Case number 2, bonus is 10% of net income before income tax expense. So, in case number 2, we have 3 methods in computing the managing partner's bonus. So, method number 1 is we have to compute the net income before income tax expense, meaning we have to find the original income before i-deduct ang tax sa net income. So, let X be the net income before income tax. So, X is equals to net income after tax divided by 1 minus 0.35. So, 1 represents the 100% and 0.35 is the decimal form of 35%. So, X is equals to 650,000 pesos divided by 0.65. X is equals to 1 million. So, 1 million is the net income before deducting income tax expense. So, how next is we compute the bonus. So, in computing the bonus, we just have to multiply 1 million by 10%. So, bonus is equals to 1 million pesos multiplied by 10% is equals to 100,000 pesos. So, 100,000 pesos is the managing partner's bonus. The next method is the fill in the blank method. So, net income before income tax. So, it is 1 million. And then minus and less income tax expense, which is 35%. That is equivalent to 350,000 pesos. And net income after income tax is 650,000 pesos, which is 65%. So we have 1,350,000 pesos here in the table. So first we have to divide the net income 650,000 pesos by 65 to get the 100%, the original net income. And then the answer is 1 million. 1 million is the net income before deducting the 35% income tax expense. Multiply the 1 million by 10 to get the bonus of 100,000 pesos. The next method is using the algebraic equation. Let B be the bonus. B is equals to 10% times net income before tax divided by 1 minus 35%. So bonus is equals to 10% times 650,000 pesos divided by 0.65.
bonus is equals to 100,000 pesos. 100,000 pesos is the managing partner's bonus. So let us now go to case number 3. Bonus is 10% of net income after income tax expense and after bonus. So we have 3 methods in getting the bonus of the managing partner. First method is the fill in the blank method. So case number 3, 10% after tax and after bonus. The bonus is based on the income remaining after tax and after deducting the bonus. The phrase after bonus is important. Because the bonus is already part of the computation, we cannot simply multiply 650,000 pesos by 10. So we have a table here. A, net income before income tax expenses. So the amount is 1 million and the percent is 100%. B, less income tax expense, which is 350,000, which is 35%. Net income after income tax expense, which is 650,000, which is 65%. And then we have 110 in the percentage. Where did 110% comes from? So let us think that the net income is the 100%, and then we have a bonus na 10%. We have to add 100% plus 10%. That's why we have 110%. Bakit kailangan i-add ang 10%? Because in case number 3, it says after bonus. We cannot simply take 10% of 650,000 pesos. We need to consider that the bonus is already included in the amount. Less bonus, 59,090.91 pesos, which is the 10%. And E, net income after income tax expenses after bonus, which is 590,909.9 pesos, which means this is the income remaining after deducting the managing partner's bonus, and 10% of 590,909.9 pesos is 59,090.91 pesos. That's why the bonus is 59,090.9 pesos. So we have the answer below. Bonus is equals to 650,000 pesos divided by 1.1. 1.1 is the decimal form of 110% times 0.10, which is the bonus, and it's equals to 59,090.91 pesos. The next method is using an algebraic equation. First, let B equal the bonus. Since the bonus is after the bonus, we subtract B from 650,000 pesos. So B equals 10% times 650,000 pesos minus B. Next, we distribute the 10%. This gives us B equals 65,000 pesos minus 0.10 B. Then we add 0.10 B to both sides. So B plus 0.10 B equals 65,000 pesos. Combining the terms give us 1.1 B equals 65,000 pesos. We divide 65,000 pesos by 1.1, giving us 59,090.91 pesos. Therefore, the managing partner's bonus is 59,090.91 pesos. So, let us now come to case number 4. The bonus is 20% of net income after income tax expense and the bonus. So, this is the same to the case number 3. So the answer is bonus is equals to 650,000 pesos divided by 1.2 times 0.20. So 0.20 because it is 20%. So the managing partner's bonus is 108,333.33 pesos. So now let us come to the last case. Case number 5. The bonus is 10% of net income after interest on beginning capital and salary allowance, but before bonus, assuming the interest on beginning capital is 14,000 pesos and the salary allowance is 20,000 pesos. So we have two methods in getting the bonus of the managing partner. So first is the fill in the blank method. So net income is 650,000 pesos less interest on beginning capital, which is 14,000 pesos, salary allowance, which is 20,000 pesos, and then net income after interest on beginning capital and salary allowance before the bonus. So this is 616,000 pesos. This is the basis of the bonus. So the answer is bonus is equals to 616,000 times 10%, which is the bonus rate, is equals to 61,600 pesos. And that is the managing partner's bonus. The next method is using the algebraic equation. Let B be the bonus. B is equals to 10% times net income, which is 650,000, minus interest on beginning capital, which is 14,000, minus salary allowance, which is 20,000. So B is equals to 10% times 616,000 pesos. So B is equals to 61,600 pesos, which is the bonus of the managing partner.